Good morning, everybody, and this is your Dow Jones day trade setups for today. So, yeah, we got the noise out the way, but all that basically happened is more confusion. And we formed this 8-hour range bar here. You can see there it is there. And we'll drill down on the lower time frames at the moment. We've got the oscillators grouped to the downside. And as I said to you, it's really not an area that I'd be looking for shorts. And we've got some clear levels to the upside before we start looking for longs. So I think there's still a bit of a deeper pullback that needs to happen. And there's one other level here. This is right here and the gap that we need to pay attention to. So let's just get down to the levels. Look at that 3-hour range bar as well. Let's just tidy up on the top and the bottom of it. Oscillators looking like they're going to cross over, so I'd expect another move to the downside. We need to break these two levels before anything happens. I'm just going to remove that level because that's actually got no bearing at the moment. The other thing is that you've got this big island. So see the gap here? See the gap there? So I would anticipate that we either going to sort of drift sideways for the rest of the week and then drop, or alternatively, the bulls are going to come in and try and enforce the fact that this 3-week island is not going to play out. So that would be on the weekly at the moment. That's kind of what they're playing for right now. So we'll have to wait and see till the end of the week what transpires there. But for me, it is just a sign of confusion. So interest rate hike was higher than expected. Well, than forecast, but not according to the market. The market had anticipated a much higher interest rate hike, and that was just based on the data that came, the CPI data that came out last week. So yeah, until we break these levels, one of these levels to the upside, the downside, I am sitting on my hands, and luckily it's a public holiday in South Africa today, so I'll get on with other things. So 31063 is the move, the break for the upside we're looking for, and 3196 is the downside break that we're looking for. Look at the oscillators, this indicating top of range, so I would expect us to move down, but we're in amongst the moving averages, and that's always a little bit scary. So looking at the 15-minute, we've broken above the 155, but look at the chaos here based on the interest rate announcement and the Fed's minutes. This is basically just confusion. There's no positive news, there's no negative news that came through. So I'd be very cautious. It does look like we're going to form, we're going to come and find some support somewhere in here. Something like that. But until we stay above the 155 in the 15 minutes, I'm not interested in any move to the upside. And if we do break below and come back and test this area, then you've basically got something like 190 point stop loss to 370 point gain for a move to the downside. That's a play that I would be playing anyway if it does materialize later this afternoon. Is I'd be looking for some clear structure for a move to the downside. And just to the bottom of the range. Not really looking for anything to the upside, not even off the bottom here, because the bigger trend is to the downside. So I want to be trading with this 1-hour trend, which is down. So we need to wait and see, I think. Probably may just turn out to be a range day anyway. We got a little bit of jobs numbers coming out today, unemployment numbers coming out today. So that may be something that people are waiting for. But I doubt it. I think this is just real confusion, waiting to see who's going to make the first move, whether it's going to be up or down, and the rest of the market will jump in with that move, just to drive price in the direction of that initial move. Anyway, that's kind of my view today. It's probably a sit on hands day, but it's well worth paying attention to your 10 and 15 minute time frames, because if you do start getting some decent structure on there, there's enough meat in this range to get a move to the downside. You just need to break through the middle of the range basically here, which is 3640. Break, retest. On the lower time frames, you're looking to jump in, tight stop loss, and you're looking for a move to the bottom of the range. That's basically it. I don't see anything else that would happen. Even if we do jump to the break this range to the upside, I think you're going to be capped pretty much up here somewhere by the 155 and this bit of structure here. And that's not the move you want to play. You want to be with the trend, and the trend is down. So anyway, that's kind of my view. Just as confused as the rest of the markets, and probably a little bit more cautious than some people. So I will have to wait for something really compelling to jump in on this. Otherwise, I am out of it. Anyway, that's kind of my view today. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.